let's take a look at what the stock market did at our 60-minute chart over this week, and you will see that, well, the elevation has continued as the market has continued to move up pretty much throughout the week. You could see end of the week, Thursday and Friday, it did start to stall. But what happened right in here is equities got a lift right in here, despite the fact that trade tensions were picking up there on Monday. But the stock market basically had this choppy day on Monday. Here, Mexico talked about retaliation on the tariffs. The peso had a big drop. The Mexican market is moving down very sharply. And we actually think that Mexican market is within a week or two of making a bottom. Netflix, Twitter, they came out as added to the S&P 500 on Tuesday. That gave this overnight lift to the indexes that you saw right there. But then the market got a little bit choppy, and a strong close is, well, pretty typical. On Wednesday, ECB hints at the end of QE to this year. You got U.S. labor costs rising, and bonds fell 1 point on that. It knocked these indexes down right over here. But then you could see Tesla, which exploded here for almost 10% on Wednesday, drove the NASDAQ, and Boeing jumps 11 points and drives the Dow up over 300. So you had this big move over here on Wednesday, really strong. Thursday is when the FANG started to get weaker. Those tech stocks started to weigh in the NASDAQ. The NASDAQ had a pretty good decline throughout the day, and the short covering came in right over here and saved the market from a big decline. And then the war of words started with this pre-G7 meeting right here, and the markets in Europe got knocked down. They came back some, and the Asian markets were hit pretty good. And then Apple came out, and they warned that to their suppliers that iPhone orders were soft, and the suppliers got hit, and that's where you got this drop over here overnight on Friday. But then from that point right there all the way through where we are right now with 2 hours left to go in the day, the market has pretty much firmed up and gotten right back up to the highs for the week. So you can see that, you know, we've been in this basic uptrend, and this has been going on now for several weeks, that you can see without, well, anything but just a little bit of a choppy rest right over here at the end of the week. So that's a picture of the E-mini S&P on a 60-minute chart. Of course, I want to invite you to become an Ask Slim member. There are lots of ways for you to do that. If you're interested just in getting our stock market report on the indexes, it's hugely comprehensive. We put it out on Thursdays. You get to see all of our analysis, all of our charts, and interpretation of them all. It's just a great report called the Stock Index Report. We also update it with changes of momentum and trend along the way. So you can basically see all of our work on the indexes for $19 a month. Just absolutely incredible. And that is included in all of our premium memberships. You can try our level 2, all of our videos, over 300 videos that you will just learn a ton from, 8 different categories of videos. I'll send you a link for that for half price. You'll be able to watch all of that for just a whole month, unlimited watching. You're done, then just cancel, but it's just $18.50 for that half price link. I can also give you our rankings and setups, or our level 4, all of our charts, and everything else on the Thinkorswim platform. All of that analysis we do, plus our rankings and setups, videos, stock index report. I'll send you a half price link for that. But you've got to be using our preferred broker, TD Ameritrade Thinkorswim platform, in order to get that. So there's so much that you can have. Our content is just unbelievably comprehensive, and you will continue to learn a ton. Yeah, I'm wrong sometimes, but that's what an analyst does, right? But it's a greater percentage of the time that the analysis is right, and our educational stuff that we bring you is just an amazing value. So do write me, slim@askslim.com, for our half price links, and subscribe if you don't want to get any of those half price links, just to the stock index report for 19 bucks. It's just loaded with great information. Take a look here at the S&P 500. I think that those people that follow our cycles understand what I just said, and those people that really don't probably are saying, well, there's some hocus pocus there. But I do understand it, so that's all that matters to me. Take a look right over here at the S&P 500, and I'll show you now what I just said that will make some sense. This gray cycle right over here, that's what we thought was going to be the dominant pattern, and that this moving down right over here would bring you a large decline. That's what we've been talking about. Now, what happened was that this big cycle right over here is actually the Russell and the NASDAQ. They line up pretty nicely. And what that did is it shifted it out by 14 days right over here. That means that this rally that you see right over here, instead of being late and ready to move down, is actually a little bit more early. It gets up into this resistance zone, so this is what we're looking for this week. That's this decline right over here, but that's not the big one. The big one would come after some choppiness in here and then rolling out. You can see right in here that that projects the bottom of that corrective period, and now the high risk period for the NASDAQ and the Russell, which is the dominant indexes in here, those end in the middle of July. So that's essentially what we're looking for. We're going to look for a down week this week of some modest amount that gets us down into this support zone, then another rally over here, and then this period over here in late June to mid-July as the period of the greatest risk for a correction. So pullback this week, the target zone would be right over here around 27. This is 2740. This is 2730 roughly, and this is roughly 2717. So that's the zone we're looking at right in there for a minor pullback, between 2740 and 2717. And then the risks of those lower numbers down in these 2600s down over here comes in late June and into July. So we'll just call it a modest down week this week. These are two fib confluence areas right over there that you can see, and there's a little note to our subscribers that the Russell and the NASDAQ dominant cycles have shifted out to mid-July, and that would be this double confluence area right over there gives you where the resistances are right now, as we're stalling in one of them at the moment right now. If it gets through there, which would surprise me, but they keep surprising me, that would be 27.95 to about 27.98. So that's what we consider to be the extreme. If it got more legs on the upside before it started to correct, we actually doubt that. We think it's going to roll over. It will be a down week of some modest proportion, and then again after that, trying the upside again before we get into any significant corrective period.